iFAST just released a stellar second quarter earnings, with Group AUA hitting record day 6.13 billion. Based on my latest article on the Fed's investor, here are the three key takeaways behind this growth, from Singapore's momentum to peaking headcount. Let's dive into the explainer.
All right, let's dive right into this. Welcome to This Explainer, where we take complex financial reports and distill them down into their absolute core drivers. Today, we're unpacking the investment thesis behind the wealth management platform iFAST. We'll be looking heavily at their highly ambitious second quarter 2026 results. The goal today is to separate the grand vision from the actual, everyday mechanics that are driving its long-term value. So, if you want to know what's really happening under the hood of this financial engine, you are in the exact right place. Here is our agenda for today. First, we'll look at the S100 billion vision. Second, Singapore's unstoppable core engine. Third, the returning IGB deposit momentum. Fourth, reaching peak operating leverage. And finally, navigating market cycles. Section 1, the S100 billion vision, a massive guiding post. To really wrap our heads around that 2030 vision, we've got to anchor ourselves to the current reality right now. As of the second quarter of 2026, iFAST hit a record high asset under administration, or AUA, of S36.13 billion. I mean, this isn't just a slight bump, right? This is up 32.8% year over year. To put that into perspective, if they just repeat their first half net inflows in the second half of the year, they're going to easily cross the 40 billion mark by year end. And what's really striking is how this wealth is distributed globally. The group is delivering solid momentum absolutely everywhere. We're not just seeing a fluke in one lucky region. Literally every single market, Singapore, Hong Kong, Malaysia, China, and the UK, grew AUA by at least 25% year over year. It's a broad-based acceleration that's lifting the entire group's AUA to an all-time high. So the big question, how do we get from roughly 40 billion at year-end to 100 billion by 2030? Well, compounding AUA at around 25% annually over the next 4 years gets them there. It's a really high bar, for sure, but as the source material brilliantly points out, we need to reframe this a bit. The S100 billion headline number is essentially a guiding post. Let's say they miss it. Let's say they compound at a lower 20% rate and only hit, say, S83 billion by 2030. Would you call that a failure? No way. At S83 billion, you are still looking at significantly higher revenues, increased earnings, and consequently, way higher dividend payouts. Plus, at 20%, they'd still hit that 100 billion mark just 1 year later, in 2031. The exact year actually matters a lot less than the immense scale they're actively building today. Okay, moving to Section 2, Singapore's unstoppable core engine, the bread and butter. The sheer momentum over in Singapore is just exceptional. In the first half of 2026 alone, this segment generated a net profit of $27.77 million. And to put that astounding number into context, this single 6-month figure just beat the profit generated in Singapore for the entire full year of 2023. At nearly $25 billion in AUA, Singapore accounts for roughly 69% of the total group AUA. Delivering a 30% year-over-year growth rate on a base of that massive size adds an incredible amount of absolute volume to the business. So, what does this all mean? The crucial point is understanding exactly where this platform's stickiness comes from. To DIY investors, it might seem kind of counterintuitive to buy traditional unit trusts when you've got lower expense ETFs right there. But here's the reality check. Despite the massive popularity of ETFs recently, iFAST saw a resilient 31% year-over-year growth in unit trust AUA. Why is that? Well, because active DIY investors actually represent a relatively small slice of the overall wealth pie. Most people simply do not enjoy managing investments themselves. They much prefer to delegate the whole shebang. And this dynamic brilliantly illustrates how iFAST successfully fends off some incredibly fierce competition. They're up against low-cost trading platforms like Moomoo, Tiger Brokers, and Interactive Brokers, right alongside massive local banking giants like DBS and OCBC. But traditional wealth advisory remains very much alive and well. That high demand for delegation and advisory services is exactly what provides the stickiness for iFAST's core business. It allows them to thrive even in a deeply crowded market. Section 3. IGB deposit momentum returns, the top-line catalyst. Let's look at the bank. In previous quarters, momentum was definitely stalling. Net additions slowed to just $20 million in Q4 2025 and $40 million in Q1 2026. But look at the sharp upward trajectory recently. That slowing trend is totally broken. Net deposit growth aggressively re-accelerated back into three-digit million territory with a massive $200 million in net additions for the second quarter of 2026. The momentum is absolutely back. The immediate result of this deposit influx is pretty striking too. The bank segment saw a 174.5% year-over-year profit jump in Q2 2026, reaching a record $1.92 million before tax. Now, yeah, while the absolute contribution of the bank is still modest compared to the core wealth management business, this re-acceleration is a huge indicator of the bank's long-term potential. If this trajectory holds, they're on track to double their full-year profit compared to last year. But sustaining this trajectory relies entirely on execution, particularly in acquiring deposits across digital personal and business banking. They've been busy restructuring the banking division and rolling out features to scale things up, like worldwide scan and pay powered by Alipay Plus and SEPA functionality for Euro payments. These are fantastic digital hooks, but as the analysis rightly points out, we need to closely monitor if these digital features actually translate into sustained deposit inflows and, crucially, consistent fee income over the coming quarters. Section 4. Reaching peak operating leverage, the bottom line catalyst. This is where it gets really interesting. Validating what management guided previously, we can see headcount peaking right around mid-2026 and then gradually reducing toward 2028 as AI adoption scales. Passing that mid-year mark, we can validate this trajectory. While the percentage change in staff cost was up pretty heavily early in the year, the projections moderate significantly in Q3 and Q4 to a much more conservative increase. This essentially just accounts for mid-year compensation reviews while the total headcount flattens out. And here's how this builds a beautiful operational math equation starting in the second half of 2026. It's a simple three-step process. Step 1, headcount officially peaks. Step 2, because headcount is flat or reducing via AI efficiencies, the increase in staff costs moderates significantly. Step 3, with costs controlled, a much larger portion of that top-line revenue growth drops directly down into underlying operating profit. While official guidance points to broader profit margin expansion in 2027, this basic math shows we should start seeing incremental improvements right now. Finally, Section 5, Navigating Market Cycles, a reality check. We have to stay grounded here. The massive plunge we saw in 2022 and 2023 is a brutal reminder. Compounding AUA is almost never a straight line up. iFAST short-term performance will always be somewhat tied to broader equity market flows and general market sentiment. This historical dip is the perfect reminder for us to stay cautious about short-term quarterly fluctuations, even while remaining highly optimistic about their long-term structural growth. Which brings us to our final, somewhat provocative thought for today. Given the resilient stickiness of their wealth advisory, the returning momentum of their global bank, and the operational leverage that is kicking in right now, is the market fully recognizing iFAST's long-term compounding potential? Yes, short-term fluctuations are guaranteed, but the underlying mechanics point to massive long-term growth. It's really a balance of patience and vision. I want you to think about that as you continue to analyze this space. Thank you so much for joining me on this explainer. I really hope this deep dive helped clarify exactly what is driving the engine over at iFAST. Keep learning, and I'll catch you in the next one.